All right. We are live. Good morning, good evening, good afternoon. In today's live, I'm going to start out by talking about this. It was launched 2.5 weeks ago. We're only about 10 days from the end of this 30-day period to comment this proposed new product from the Federal Housing Finance Agency, where Freddie Mac would purchase single-family closed-end second mortgages. What does that mean to you as a consumer? Why do you care? If there was a product that was widely available, and trust me, if Freddie Mac or Fannie Mae, the government-subsidized, government-sponsored entities, whatever the GSEs are, if they are allowing the purchase of these products, then it becomes widespread because every lender around the country that sells to them is going to offer a product that they're buying on the back end. So why is this product being rolled out? What does it hope to accomplish? Sandra Thompson, the FHFA chair or director, has a statement online. I've got a video I'm going to put out Thursday. Would love to hear your comments because right now it's just a comment period. Public comment between April 16th and May 16th to say, what do you guys think? How do you guys think this will affect things? Is it going to, help consumers? Is it going to hurt them? Is it going to create, more competition or less? At the end of the day, they've identified, and this isn't this is no secret to anybody, people who have low interest rate first mortgages, i.e. most people, something like 80+% of people have a sub 4% interest rate on their first mortgage, are highly disincentivized to go out there and get a second mortgage. To go out there and get a cash out refinance to pull equity when they've got to refinance the whole thing at 7%, 7.5%, 8%. So the goal of this thing, give homeowners access to all this equity they've built. We have more equity across this country than we've ever had. Quite honestly, people are struggling. Give them access to that equity in a way that's not detrimental to their long-term financial stability. And that's where I think it's a great thing. I think that any of these predatory companies, I wouldn't name names like Rocket Mortgage, but their goal is to get somebody to do a deal, whether it makes sense or not. And so the data is the data. Data doesn't lie. So I'm not saying anything that you can't look up on your own. Rocket Mortgage goes after people from a 580 to 640 credit score where their net change is like a 3% worse interest rate to pull 20, 30, 40,000 in cash out. If you don't think that's predatory, I don't know what to tell you, but it's wrong. It's predatory. It really, really harms people's long-term finances. It really, really, eats away at this hard-earned equity people have been paying on a mortgage for 6 years, 8 years, 10 years. The market's appreciated. It's a great, great thing that home ownership has caused wealth in a lot of demographics for a lot of people that otherwise wouldn't have been able to build multiple six figures of wealth. So to get somebody on the phone with some kid trying to sell mortgages through a call center that talks them into leave the $280,000 first with 2.875%. Let me do a refinance to $325,000. Put $20,000 in your pocket, charge you a bunch of fees, increase your mortgage payment by $1,400 a month. That's terrible. So this would allow people to have a much better option, which there's already options out there. And I know that one of the things I'll show you guys, this 14-page notice for comment and whatnot. But one of the things that's out there is that, is this a needed option? There's already home equity lines of credit and other things. This is a closed second mortgage. And so for anybody who's unfamiliar, on a home equity line of credit, you might get a $100,000 credit line. You borrow 20,000, you pay interest on the 20,000 and you pay it down to 15. Then you've got another event where a kid's got to go to college and you pull another 25. Now you owe 40, you're paying interest on that. This closed end second mortgage is $80,000, $100,000, whatever it is, it all gets dispersed to you at close. You make monthly payments on it, just like you do on your first mortgage, $427 a month or whatever that number is for a 20-year period. It's not, you know, the home equity line of credit is a more like flexible type deal. This is just a second loan. So that's that. Good evening, Mr. Kevin Hawthorne from Lakeland, Florida. Marco Bello, greetings from Naples, Florida. In case you guys were wondering and paying attention, I had a graphic on here that said crash, and it showed a picture of the U.S. I've got a couple real estate agents from Florida set to join me. I believe on the 21st of this month, we're going to talk Florida real estate. We're going to talk what's happening there. If there's an oversupply, if they see housing prices declining in Florida. I'm working on getting somebody from Austin, Texas, because that's another market that grew really, really fast. And if you're watching data and you're watching places where inventory is increasing rapidly and prices may be coming down, Austin, Texas is a place to look at. Different parts of Florida are probably places where you might see some quote unquote softening in the real estate market. So we're going to talk, is the real estate market crashing? Is it set to be flat for 3 years? I want to talk to the people that are in those markets doing business. The couple, Jacqueline and her husband, or Jackie, is it Jackie? Jackie and her husband from Florida, closed 7,000 or 8,000 homes in Florida. So they know their stuff. Yeah. Tell me about your part of Florida, Marco. Housing is pretty interesting in Southwest Florida. What do you mean by pretty interesting? Yeah. Single family price cuts, but not on the 2 to 4. 2 to 4 unit is like the hack, in my opinion, for a lot of people. 2 to 4 units are getting a lot of action because people are using that to subsidize what is larger housing payments in 2024. So if they can buy a duplex, even if the payment's $4,600, if one side's paying $2,500 and they're paying $2,100, that $2,100 housing payment on their side is a way to hack affordability, where if they bought a single family for a lesser price but had a $3,800 payment, they're on the hook for the whole $3,800. So yeah, 2 to 4 unit, I don't see that stuff slowing down anytime soon. In most any market, there's still demand for that. And I think a lot of it is the investor appetite, but also homeowners that are finding all kinds of creative ways to hack affordability. What do you got here? Thanks for doing this. Look forward to seeing what you have heard. Yeah, for sure. My plan is Florida agents in a couple weeks. After that, some Texas agents. And then I've got an idea where I might grab a Jeb Smith in Southern California, an agent in Texas, an agent in Florida, and talk pros and cons, battle of the states with different agents from different parts of the country. Because, you know, there's pros and cons to all places, right? I'm sure Jeb's got a bunch of pros like the weather and whatnot in Southern California. Other people might point to tenant laws or politics or something as cons for California, but that will be fun. So I'll share with you guys, if you are interested, this 14 pager, and I'll put a link to it if you want. It's interesting to look at, and I'm not going to go through it. I literally just made a 20-minute video and I bored myself half to sleep, to be honest. But this is from FHFA. If you go to their site, proposed purchase of single family closed end second mortgages comment request. And you go on there and, you know, there's a document. It's 14 pages. I'm not going to go through this again. I almost put myself to sleep. First mortgages have low rates. People that have an option to access equity that's a better offering than the current cash out refinance or home equity lines of credit. You know, it even has a table in here somewhere where they broke down what it looks like. $120,000 first at 3%. If this client wanted 30 grand in cash out, rather than doing a cash out to 150 and a 7.5% rate and a total payment of 1,048, get them a second that they pay $279 a month on, and that payment plus their first is $912, saving $136 a month, and over $100,000 in less interest over the life of the loan. So these are the reasons, and I agree wholeheartely with it. I think where some people are going to get lost is like, oh my gosh, this is going to, like, I heard something recently like trillions of dollars in home equity is going to be like flooding the market. It's going to cause inflation. Get out of here. Like, this is only for the time being Freddie to Freddie, meaning you can only get a second here if you have a Freddie Mac first. So it's limited to just those folks. So many other people already like don't have the equity to do a second loan, or they've already got a home equity line of credit. There's a million reasons why, like, not every single person with Freddie Mac first mortgage is going to go out and get one of these. You know what I never did? Freddie Mac. I think I'm going to see if this still exists. Freddie Mac lookup tool. I think you still can do this. Like, type in your address and see if this still exists. I pulled it off the screen because I wanted to type in my address. I didn't want you guys to see it and come knock at my door. Come and knock on my door. I'll be waiting for you. I should stick to mortgage and not sing it. Agreed. Trust me. My wife agrees. Okay, by checking this box, let's see it. Oh, our records show that Freddie Mac is not the owner of your mortgage. All right, I can't do it. Let's try this. No. Fannie Mae lookup tool. I am out, man. That's too bad. I would have done one. Freddie Mac, not the owner. You are not the father. Area median lookup tool. That ain't it. I just want to look and see if they own it. All right. Enough about that. Marco, I own duplexes, but not even house hacking makes it affordable. Need duplexes, $5.25 to $550, rents per side, $2,000 to $2,100. Mortgages are more than $4K with 25% down. True story. I'll even solidify your argument here. I'm going to do purchase scenario, just so people can see. So 525 to 550 is a decent neighborhood in Florida, I'm guessing, Marco. It's subjective, right? When you say like not even house hacking makes it affordable, because like 25% down, $2,100 a side. If you're an owner occupant, you don't necessarily need it to cash flow. You're just looking to subsidize your payment. And I guess where people are going to choose to rent versus buy is if they can go out and rent something nice for $2,000, and if that mortgage payment is $4,500, 25% down on 550, you should be able to get that thing under $4,000 for sure, Marco. Mortgages are more than 4K. With 25% down, like, there's plenty of lenders where you can get 7.6, 7.9 on an investment property, 25% down. So let's call it 7.99. $799. You're borrowing $412, $500. So your principal and interest is about $3,000. If your property taxes are, well, in Florida, 1.5%, even then that's less than $1,000 for taxes and insurance. I mean, homeowners insurance. California and Florida, we got the same problem. It's an issue. But yeah, maybe you're $3,800 to $4,000. So it's not a home run. But here's the case: if you've got a $3,800 payment, taxes are $6K a year, $2K insurance. Okay, so $8K divided by 12, call it $700, $37.25 a month. Now, one, that's 25% down. Not everybody has, so it's higher than 4K if it's a 3.5% down FHA or a 5% down conventional. But if you got 25% to put down, the thing is going to flow. And like $37.25 a month, if you're getting 21 on one side and you're paying $16.25, you're winning, because likely you can't rent anything for less than $2,000. But I don't know. It's still a problem, and I'm gonna talk to those Florida agents about it. I'm gonna get some California agents, some Texas agents, these different agents, and see what they are seeing. Because the truth is, there's still plenty of demand. There's still people out here buying, and I'm sitting on 100+ pre-approvals where buyers are tired of waiting. They've been told to wait. They waited, and things got more expensive and rates didn't come down. So they're going to buy knowing that this is the highest payment they'll pay. If rates get better, they will refinance and lower their payment. If they don't, then they can afford where they're at. But I think there was some buyer fatigue after rates were higher for longer, and now that buyer fatigue is turning into frustration. All right, I got to jump off soon. I got baseball today. Fire away with any questions, comments, concerns you got. If you're interested in that closed second that I was talking about, this Thursday or Friday, that video is going to drop. It's 18 minutes, so I spent way more time than I was planning, way more time than needed, but went through like each specific question that was posed from FHFA, where when they open up for public comment, they want public comment, but also on like specific questions, like to what degree is it going to promote or lessen competition in the marketplace? To what degree will this new product overcome natural market barriers or inefficiencies? To what degree might it raise or mitigate risk to the mortgage finance or financial system? There's going to be a little bit of added risk with people taking on more debt, but if they have more options to take on debt that is structured in a better way than the current options, I think that's a good thing. So stay tuned for that. Tune into it coming Friday. Let me know what you want to see. We're going to talk about different real estate markets across the country. I've got videos coming as requested on different price points and what mortgages look like at 200, 300, and 400K. And really, whatever you guys want. I'm a man of the people. So whatever you ask for, that's what I shall deliver. Thanks for watching. Till next time, we gonna see.